Now, next up, we have an executive interview on ecosystem play. And a big thank you to Rate Stella for sponsoring this session. Yeah, you can give a... Well, so I'm going to tell you what this one's all about first. So conducting this interview is Leonardo Saroni. Now, he's general partner at TT2 TravelTech. Now, that's a €50 million growth capital fund backing the next generation of European travel tech leaders. And he's also spent 12 years as part of the Booking.com extended leadership team. So there he was helping drive the company's global growth across marketing and product development. Now, Leonardo will be in conversation with Henry Briance. Now, he is the Senior Managing Director at Certares, the New York-based private equity firm specializing in travel, tourism, and hospitality investment. He was quite happy to introduce him just as Henry, which is my son's name. So, yeah, I'd like to bring up Henry and Leonardo. Please do give them a very big round of applause.
Good morning, everyone. Thanks, Henry, for joining us today.
Good morning, my pleasure. Realizing the theme of otherness, I think I might be the only person in the room who knows nothing about technology. So any ideas I have are sustainably recycled from things I've heard from all of you. But happy to be here.
I'm sure you bring a very interesting perspective. We're in a room full of 1,000 of executives. And we heard also in the previous panel, it's an exciting time. Each of us is thinking of how to tackle AI, and we're all under pressures to deliver an AI strategy, whether that's on distribution, on operational efficiency, on content. At the same time, this can represent a threat for most of us. The next version of Claude or OpenAI can disrupt our business. And to be honest, building AI, we heard the news the last few days, it's a $3 trillion investment, which requires a lot of capex that probably none of us in the room can afford. So my first question to you, Henry, is from your investor perspective, right? When you evaluate travel landscape today, how do you distinguish businesses that you think can be threatened by this AI revolution and against those that you think will continue to remain insulated by AI?
So I think the first thing to say would be, in the current market, and probably for the last year or so, every investment committee conversation starts and ends with AI. It doesn't mean everything is about AI, but the question of what does AI do to this business? Is it relevant? Does AI help? Does AI hurt? Does it have nothing to do with it? But it's never not on the table as a conversation. And that's an interesting and relatively new thing, such that we've heard, and this is not specific to us, this is private equity firms, venture firms, LPs who are the allocators of capital. That's a must-answer question, and if the answer to that question is not satisfactory, there's nothing else really to discuss. And I think that's probably going to be here to stay. Different investors break in different directions. But for us as a travel investor, from a really macro perspective, it feels like AI is going to be a net good for our industry in terms of demand, ability to serve customers, and maybe in the sort of optimistic crystal ball version, as if it's something that makes society richer, releases human hours back into leisure and enjoying life, consistently and reliably travel and experiential investments benefit from that. And as the world gets more digital, more automated, the value of human connection goes up, not down. But to your more specific question, I think that the AI topic shines a real light on what is the value add, how does the company that we're looking at investing in create its margin, and is that something that AI is indifferent to? So you can imagine if you are an infrastructure investment, if you own highways in Germany, AI, no, you talk about it, ask and answer, nothing relevant. If you are right in the middle of the crosshairs of you do something that AI does better and cheaper, then you're in trouble, and most things are somewhere in between. But we find that we have to spend a lot of time unpicking why does this company exist, why do their customers use it, where is their value add, because AI is in many ways a great leveler. It will probably flatten out things like information asymmetry. That if the reason you make your margin is customers don't know better, that's probably going to be bad business. But there are a lot of things we see where there's a real value add, and AI can improve efficiency, so reducing the cost to deliver the service and also make the service better, and that's where I see businesses thriving. Still at the very early stage of adoption, and some of this is not quite hypothetical, but there are not a lot of, call it traditional companies that are deep into the AI journey, but everyone is trying to position themselves and work out where might this be going, and in the various possible AI futures, will I be happy that I own this company? Sorry, long answer to a short question.
Yeah, thank you. So we need to have an answer. That's basically the main takeaway. Can be multiple answer. We heard in the previous panel that it's never been easier to create a startup. It's as exciting as threatening. It's fast, it's cheap. Everybody in the room with some vibe coding could end up building their own startup. So in this era where everybody can build an application, what do you think will continue to constitute a defensible moat? And to what extent, this fast-changing environment where everybody can build something applies to travel, and how does it compare to other industries?
So on the compared to other industries, it's definitely true that paradoxically, new business formation is really high in the US, higher than you would expect for where we are in the economic cycle. And that's sort of, as you said, it is the resource constraint around turning your idea into a company, which traditionally is you have to hire a lot of people and you need more money to start. And so there will be more, I think there's more dynamic foundation starting businesses. That's not specific to travel. I think that probably applies also to travel. And so there will be a wide range of things coming to market, being tried, point solutions, as we heard on the last panel, and I think everyone in this room knows better than me that travel is deeply idiosyncratic, pretty complicated, lots of weird little niches of problems that someone who is a generalist or even a travel specialist who's not a technologist would never think to exist, but there are real problems that people are solving. And I have, again, this place where I have to confess ignorance of, we are not startup investors, so I'm not well versed in the sort of VC startup ecosystem, but we definitely see more innovation, more stuff coming, both from startups and from incumbent solution providers. And from the perspective of the companies that are customers or users or adopters of this, there are competing tendencies between I want to mix and match. I want to get the best thing for the best thing for each use case versus I also want to make sure it all works together and it's being provided by someone who can deliver it and who I trust. And so I think you'll see both of those trends continuing, but the consolidation that was referenced in the last panel and is a clear and continuing trend, I think goes to both of those points where there are specific issues to be solved that can be solved now, are being solved by innovative new solutions. And then you're seeing some of the big groups acquiring small and large chunks to say, I have the customer relationships, I have the commercial infrastructure, I have the money to take this from an idea to a big stage. And that those two things will continue to go back and forth, and I think different consumers of technology will take different decisions based on where on the spectrum of yourself being a technology company, and so you say, I've got 90% of my own solution in-house, and I'm going to hire in specific expertise, versus I'm really not a technology company. I'm looking to rely on partners. I need to be digitally sophisticated. I need to be tech forward, but I'm going to acknowledge that that doesn't mean that I'm going to raise $1 trillion and build an LLM. Like it's a great absurd example of course, no one is going to say, I'm going to have my own personal Anthropic, but everyone will fall somewhere on that spectrum.
Okay, and you're mentioning there is a proliferation of startups, and we expect this to continue to grow. On the other hand, a consolidation is also expected, right? So there's a dilemma here, I think, for most of the people in the room, of whether we should continue to manage all these solutions, and I think each of us is exposed and pitched every day, even here at ConX, by multiple solutions. There's really a dilemma on whether we should continue to manage all these solutions as a portfolio, or try to integrate them as much as possible into an integrated platform, right? And there's pros and cons of integration and consolidations, but also there's threats, because it means we're basically giving access to our own data, our vendors, our clients' data. So what's your take on that? How do you expect that to continue to shape the industry, and also from an investment standpoint, where do you stand?
So taking that last point, as an investor, trying to understand whether something is a platform or a portfolio would be a big focus of as we look at it, and that's not just for technology players, but for anything. So you have multiple things that are obviously distinct. How do they work together? Why are they assembled under a roof? Are they better together than apart? And there's no one right answer to that, because you can praise the merits of diversification, or you can talk about integration and synergy, and those that pull in opposite directions but are both good answers. But as we look at a company, and you've got multiple different things, can the company articulate why it is better, or how does it work better that these are together and independent? And that might be commercial strategy of we're selling similar things to the same people. It can be technical, which is these bits of the solution naturally live together, and if we can bring them together and single it, we are better solving the problem by being together. And this is an area where, as a private equity investor, we have to lean heavily on the operators and experts to say, because there are many more things that make sense to me, given my level of ignorance, than actually work in practice. And so we would start with, does this make sense in theory? And then we have to bang against that to, okay, really, is this better for the customers? Do you create a stickiness that is positive? I really like using this, and I want to keep using it, not I'm in it and I'm trapped. I get very worried when someone say, I use this, but I'd really prefer not to, but I haven't figured out my way, I haven't jailbroken myself. And so I think there's a very broad vendor management topic, which you see, this is not specific to travel or to technology, of, companies like to consolidate vendors because you're dealing with fewer rather than more is easier, only to the extent that that doesn't cause a risk management issue. And that's both, are you stable and reliable? Can you handle the business we're giving you? And are you going to be a problem? Especially on any of these technology and data type things of, say, are you the sort of partner that I am comfortable is not going to do anything I'm not going to be unhappy with if I sort of build my house on your foundations. And I think a lot of the really great companies that are building consolidated platforms in our industry start with that being well-respected, trusted partners that when you sort of channel check them and they kind of say, yes, it's great, and I will buy more from them. If they solve this problem, I would rather do it with them than with someone else. And I think that's a way of thinking about this. Like, can you build on a commercial and customer relationship such that they want to do more business with you? Because in this AI-enabled world where the defensive moat is different than it used to be, or is trending in a different direction, that the ownership of the software that used to be kind of say, well, it's impossible to replicate this because it reflects hundreds of thousands of labor hours to create. That is probably less valuable now than it used to be. That's not that it's not valuable, but it's different. Whereas the deep integration, process knowledge, expertise, and ability to solve the specificity of problems is probably even more valuable as just, call it, the coding becomes easier to do. Although I think one of the sources of optimism for the industry as a whole is, people talk about, say, the infinite backlog of, when I look at any of my companies and say, what are all the things that technology could do for us? There is always a longer list, or has always been a longer list than any sensible budget would allow. But there's talk about sort of Jevons paradox or whatever. Say, as we get to a place where our vendors or our own tech organizations can be much more productive and do more, we can get further along that infinite backlog. But that backlog is infinite because the businesses can keep iterating and keep getting better. And to the extent that the people in this room are building cool stuff that solves real problems, the more those problems get solved, the better the industry gets for customers. And I think there's a virtuous circle between improving how the industry operates and ability to serve customers and the demand side effects of that.
Thanks a lot, Ari. I want to switch the conversation a little bit more on future outlook. It's a time of uncertainty. We heard at the beginning of the year about SaaS apocalypse. Valuations are under a lot of pressure. So in this market of uncertainty, I think people in the room want to know, how is this shifting your appetite for investment and towards any specific asset class?
Yeah, so it's a good question, and I'm going to have to disappoint you by saying it really depends. You're seeing some investors go largely risk off of, say, we can see that AI does something to this sector and we don't know what, so we're gonna sit it out. Sort of where you see more fear of disruption than excitement for transformation. And you see other investors jumping in and say, I can see how this business gets better, and so it's a good time to attach self. The sort of SaaS apocalypse you were talking about, some of that's uncertainty, and some of that's just valuation of the bedrock certainties of the last couple of decades around defensive moats and software, and businesses were valued on the basis of revenue only ever goes up, never goes down. Customers couldn't escape even if they wanted to, and therefore these companies have very high valuations. I think the companies are still good and they're still there, but investors got a bit of a moment where they say, we have to check that fundamental assumption. You may remember that there was that sort of research note that came out. It wasn't so much an analysis as a thought experiment of, as AI means that every software business can be replicated by one person on their laptop. There's a sort of a death loop, and everyone ends up in a sort of 1930s style depression and global war. It's like, this was just a thought experiment, but the market moved dramatically the morning after it was published, which I think is just a sign of aggregate restlessness and uncertainty. But I think that's one of the themes of some people are jumping in heavily, taking a point of view. Obviously, the big AI companies are raising impossibly large amounts of money to be the winners of the space race, as it were. And that, sort of most normal people are just sort of sitting that out, because unless you have tens to hundreds of billions of dollars to spend, it's kind of the Anthropics and the OpenAIs are creating these tools that the rest of us will find ways to access and use. Another thing that we've heard people talking about, and this is not so much private equity investors as the allocators of capital, saying we need to do something. We're not sure where the risk attached is. So there's an acronym called HALO, hard asset, low obsolescence risk, of say, AI is going to make, but how do we invest in things that we say, irrespective of how this plays out, we're comfortable. And so some of that would be real physical world asset-based businesses. You may have seen that we announced a partnership with Trenitalia for the rollout of their business in France. That's why I would say, unless you believe we're in the matrix where we're all going to be plugged into pods and not moving around, the expansion of high-speed rail in Europe, we think, is a good, positive, secular trend that is not, that AI will make that business better, but it's not fundamental to whether people are going to need train tickets. So I think you'll see diverging behavior from investors. There's clearly elevated caution around, if you're not sure what's going to happen, sometimes, and I think there's a difference between being, say, a financial investor and someone with a real job and a business to run, where you don't if you're in the business, you don't have the option of doing nothing. You have to pick a path and do the right thing. But I think you'll see a lot of financial investors taking a wait-and-see approach, be judicious and thoughtful, and say, am I comfortable missing out on the next big thing to avoid looking ridiculous if I'm very wrong?
And what's the piece of advice for folks in the room that are mostly operators and not investors when it comes to AI? Is it building, adoption, implementation?
I don't know that I don't know that I can sensibly advise, and everyone in this room knows more about what they're doing. I think there's a lot of specificity, but that kind of buy versus build versus rent versus partner, because like, what is your core differentiation? Is there a reason to believe that you doing it yourself is going to be better than partnering with someone? I think Pedro and Luisa were talking about like what is our thing, our differentiation. That makes a ton of sense to me. Of people don't need to be all things to all people, or rather, it's very hard to do that. And I would say it's not like, from an investor perspective, I would rather understand clearly what you do and why there is real value add there than say, I'm an island, I have no dependence on anyone else, because that's clearly not going to be the case, because there's going to be interdependencies. And so that focus on real clear value add that would reflect itself in, if I want to buy a business that you own, I'm going to talk to the CEOs of your customers, and are they going to say, this is great, they're a great partner, and we pick them because they're the best at solving the problems that they solve. Sorry, that's a very generic answer, but that would be.
Henry, I want to spend the last couple of minutes to ask a bonus question, which we haven't prepared. But since the theme of today's event is otherness, and you bring an American perspective, right? I mean, you're from UK, but you spent 20 years in New York. What's the otherness of Europe, and what can make us different compared to the US, right?
I'm not sure how I can answer this question
without
getting myself in trouble. So one of the things, and this is probably not very relevant to this crowd, but Europe as a destination is spectacular. Core asset that Europe has that no one else can have is the depth of history, culture, kind of stuff that say, Destination Europe is a theme that I individually and we at Certares would absolutely back as sustainable. People will continue wanting to come visit the treasures of Europe, and so businesses that make that better, that help market the country, make content available. I think that's something where I'm not sure that's a sort of ecosystem thing versus like there are real assets here that are different.
I guess my question is more from a technological standpoint, right? We lead from a tourism destination standpoint, but if you look at valuations, tech giants are not European. Do you think there's still an opportunity for us in Europe to catch up?
So this is one that's like coming from an American perspective. Like I could see from a national security perspective, there's a lot of focus on sovereign control, data, like building things that are specific to the European regulatory and legal environment probably will over time have some differentiated advantage. But this is one where I'm going to have to, in American parlance, plead the fifth, only because I don't off the top of my head have a really strong perspective on, say, what technology should a Europeans build as distinct from what Americans build, because I think the nice thing about the tech, it can be global and universal, which I think tech investors are very interested in. I think there is some European specificity, but I think there's a panel later on with people who know much more about this than I do, so I'll have to respectfully demur on that.
So let's wait for the panel. Henry, it's been an absolute pleasure to have you here today, and everyone, join me.
Good chatting to you. Thank you, Leo.
Thank you.